Hi, this is Nicholas Vardy, and welcome to this week's edition of Buy or Buy. In this series of weekly videos, I take a popular stock making the media rounds and I strip away all the hype, and I tell you whether you should buy now, buy later, or buy never. This week, I'm going to take a look at tech darling Netflix. Netflix has been a dominant player in the streaming world ever since its IPO in the early 2000s. Yet the media narrative around Netflix has soured over the past few days, as headlines have included words like growth trap, borderline catastrophic, and reckoning. Following the company's recent earnings announcement, the stock dropped over 21%. That made it its worst day since July of 2012. Netflix's fall was so bad that even competitors' Disney stock fell by 6% over the same day. Meanwhile, hedge fund manager Bill Ackman announced that he had purchased 3.1 million shares of Netflix for over $1 billion for his hedge fund Pershing Square. That made Pershing Square a top 20 shareholder of Netflix virtually overnight. While Netflix stock has bounced since then, it is still down over 30% year to date and is down close to 39% off its all-time highs. Is this the final curtain call for the original streaming innovator? Or will Netflix gains see a sequel in 2022? Founded in 1997 in Los Gatos, California, in Silicon Valley, Netflix started off as a DVD mailing rental company. Few investors know that in 1998, Netflix actually turned down an offer to be acquired by Amazon for approximately $16 million. Today, the company's digital streaming service has approximately 222 million paid members in 190 countries. After a blockbuster year in 2020 that saw streaming players soar in the stock market as a result of the COVID-inspired stay-at-home culture, Netflix stock underperformed the S&P 500 in 2021. Netflix still leads the world in number of paid subscribers, but streaming competitors are rapidly catching up. Slowing subscriber growth rates and competition from rival streamers has made the business environment far tougher for Netflix than it's ever been. Now let me set out the bull case for Netflix. Netflix plunged more than 21% on January 27th after the announcement of its financial results. It showed a relatively weak growth in subscriber numbers of 8.3 million. Now, the bulls say the sell-off is overblown and that investors have thrown out the baby with the bathwater. First, for all the hoopla, Netflix actually beat analysts' expectations on user numbers for the quarter and on earnings, and it met expectations on revenue. Second, Netflix continues to rack up solid subscriber gains on the back of hits like Squid Games, the South Korean survival drama that became a smash hit. Third, Netflix has expanded across the world and upped its spending on local content to attract more subscribers to its platform. The stock has already begun to bounce and rose 10% in a single day on January 31st. Others are less bullish on Netflix. First, Netflix remains the market leader, but is no longer a disruptor in its industry. Once a first among equals, it is now a beleaguered incumbent. According to Just Watch, Netflix's massive lead has shrunk to 6 percentage points ahead of Prime Videos, with Netflix having 25% market share compared to 19% for Prime. Other major rivals include Disney, HBO Max, Apple TV, and Peacock, all of which are slowly catching up. Today, it's clear that the video streaming market is highly fragmented and highly competitive. After all, you're watching this on YouTube and not on Netflix. Second, Netflix has a far weaker business model than its rivals. Netflix revenues are solely driven by subscription fees. Unlike Netflix, rivals can subsidize their streaming services with profits from their core businesses. Many also offer live content, which Netflix does not. Indeed, it's revealing that over the past 5 years, Netflix has generated positive free cash flow just once in 2020, and that was during a time when it reduced its expenditures on original content substantially. Third, the reality is that Netflix content is no longer a must-have. When I look at Netflix today, I see two things. First, there's a lot less content than there used to be. Back when House of Cards was a hit on Netflix, Netflix was a must-have service. Today, that's no longer the case. Second, Netflix keeps getting progressively more expensive. On average, it increases its fees about $1 to $2 every year since 2014. This combination of worsening content with higher fees has personally made me consider whether I want to remain a Netflix subscriber. Finally, it's not just Netflix services that are expensive, so are its stock. Netflix currently has a PE of 38. Now that compares to Apple's PE of 29, and Apple's is a far stronger and stable business. Now, before I reveal my final verdict, a reminder to subscribe to Liberty Through Wealth, a free e-letter that I contribute to twice a week. Liberty Through Wealth is packed with strategies for building wealth and living a more independent life. You'll also have a chance to read about my often contrarian, some would say snarky, views of the market. And that comment about snarky is directed at all of you AMC shareholders who ignored my advice to sell AMC stock about 50% ago. Now, back to Netflix. Is it a buy or is it a buy? Well, the truth is it's a bit of both. I think Netflix is a buy over the short term, but it's a buy over the long term. The upside of the stock are its market leadership, its occasional breakout hits, an international presence, and the fact that the stock is on sale compared to where it traded in the past. The downside is growing competition, a weaker business model, and fading quality of content for an ever higher price. Overall, the downsides far outweigh the upsides. My final verdict, stay away from Netflix stock unless you're looking to play a short-term bounce. I hope you enjoyed this edition of Buy or Buy. If so, please hit the like button below. I want to remind you that these are not recommendations that I actively track in any model portfolio. If you want to follow any of my buys or sells, size your position accordingly, set a trailing stop, and never bet more than what you can afford to lose. Thanks for watching, and I'll see you next time on Buy or Buy.